So you've probably heard the rumor that infinite banking is the secret to perpetual wealth building. But I'm gonna tell you something, it's not for everyone. How do you know if it's right for you? Today, I'll break down the pros and the cons so you can decide if you want to head down this lucrative path. So first and foremost, let's just talk about who infinite banking is not for. Because the truth is, despite what you might hear in the marketing and the other videos you might have seen on infinite banking, it's not for everybody. And it's not that it's not a good thing, it just means that there are certain situations where I would not recommend it as much. So for example, if you're in bad health, infinite banking is not gonna work for you, right? I had a client, for example, where he was 400 pounds. He was massively overweight. He knew that even if he did qualify for a policy, it was gonna be super expensive, which means that that cash that you're trying to grow, that tax-free savings account inside of there, is not gonna grow as much because it's being eaten up in cost in those insurance costs. So he said, Chris, I know I can't get on me, but can I get on somebody else? And I said, the answer is yes, you can. He said, well, what about my wife? She's few years younger than me and she's in great health. I said, even better, because women get better rates than men do. And of course, she's young, she's healthy, perfect, let's use her. And so we did. And so he's putting in over $100,000 a year into the policy in her name. Now it's their money that they're working together, but he's just leveraging her health benefit. Now, I'm not saying that if you're in not great health, I'm not saying you shouldn't have some kind of insurance, but for him, I said, you know what, maybe temporarily, at least until you can maybe drop some weight, maybe some term insurance would be a good idea. Maybe we get something right now to fix that Band-Aid and maybe we can get something better later on. So I'm not saying you don't get life insurance on yourself because I do believe that if you have a family, especially, you definitely have an insurance need. But there are options. You can go to your spouse, you can go to your children, you can even go really to your business partners and people like that. Anybody who has a financial self-interest in you, you can actually put a policy on. So there are other options around that if you're in bad health. Bad health would also include smokers. If you do smoke, your rates are gonna be higher. It doesn't mean you'll get denied, but I'll tell you, it does affect the rate of return where, again, I would prefer you not to use that strategy, but I do have a few clients that are smokers that they say, well, I'm pretty much it. You know, I'm single, I don't need a lot of insurance, but I wanna use this strategy for myself. Sometimes we use them, but it does help if you can stop smoking for at least 12 to 24 months. That would definitely drastically improve the rate of return on your policy. Who else is it not for? I would say anybody who's living paycheck to paycheck. If you hardly have any money left over and you're not even saving any money, I would just say stick with simple term insurance. That's one of the best purposes for term insurance. It's cheap, it's temporary, and it still covers a need, but you need to get your cash flow improved. Now, if you're saving at least $5,000, $10,000 a year into savings accounts, this could even mean into your 401ks. We have a lot of people that actually use this instead of a 401k, then great. That could be a wonderful option for you. But if you're not putting away at least, I'd say $5,000 a year, probably not something I would use right now. It would be something I would work on building up your cash flow and improving your cash flow that way. Now, who does it work for? It works great for the younger you are and the healthier you are, the better. Now, I will say this. Some people will say, well, am I too old? If you're over the age of 70, it probably wouldn't work as well for you. But if you're under the age of 70, especially if you're in good health, it could still be a wonderful strategy. I'm always shocked when people say, Chris, I'm pretty old. Is this gonna work for me? How old are you? 50. Dude, I'm about 46, okay? Like, don't call me old. And I do this too, and I get the great, perfect health ratings for it. So I'm like, no, don't do that. Like, you're not old at all. This is still a great option. I will tell you, like, the crazy thing is the best people are usually people in about their 30s. 30s, maybe into the 40s, 20s are great too, but 20s to 40s are usually your prime time. But still in your 50s and 60s, if you're in good health, it can still work great. So it works great for you in that case. And again, if you can put away at least $5,000, $10,000 a year, this could be a great option for you. I know some people will say if you're not putting away at least $50,000 or $100,000 a year, don't do it. That's not true. Some people even say you have to have a certain amount of net worth. That's also not true. Many times I have people that have lower net worth that don't even have enough to save. I said this is a great place to start saving your money here versus locking up in your 401k where you can't touch that money, where it's locked away from you and you can't use it to go do other alternative investing strategies that do pay you more money and make more financial freedom. So definitely, even if you're just starting out, this can be a great strategy, but even if you have a lot of money too, it can be an excellent strategy there as well. So I would just say this, is that if you can save at least $5,000 to $10,000 a month, you're in decent health at least, and if you're under the age of 70, this can work great for you. Even for children, I have a lot of people that use this instead of their 529 plan. So one of the ways you can use this is actually as a college savings plan. Some people are kind of really just get annoyed with their 529 plans after they set them up for their children. They realize one, they don't have any control over what the stock market does. And even when it does invest in the stock market, it usually doesn't do as well as the stock market. That means when the market goes up, you make less. But when it goes down, you lose more, right? They don't like that. They like to actually make money with it. Not to mention, what if your kid decides not to go to college? Well, what do you do with the money then? If you don't have enough kids to pass it on to, you might be stuck with this and have to take a penalty on it anyways. What if your kid actually gets a full ride scholarship? They just don't need it. They go to college, but they don't need it. Great. And so you don't really have that flexibility with the 529 plan for college savings like you would with this, where you can use it for whatever you want. So I have some people who set up policies on their children, and they'll use that money even now to invest. Some of them will just use it to save for college, but some will actually invest with it now. They'll buy real estate properties and whatever it might be, build up those assets and the cash flow, and then that's what ends up paying for their college and their schooling. Makes money a lot faster than just putting it inside the insurance policy, making 5% or so a year tax-free. The other thing too, I would say is another way to use this is many people will use this as just an emergency fund. This is what I use it for specifically. I actually have some of my money in my life insurance earmarked just for emergencies. That means money I don't touch. My wife wants to have a good nest egg. We keep some of it in the bank for quick, easy access to get today. For example, if I want to walk into a bank today and pull money out, I can do that out of the bank. For this policy, it takes me usually about a week or so to get that money. So I'll put the bulk of my money, my emergency fund, into this. Why? Well, one, I know the bank pays me 0.0%. And two, they tax me on that 0.0%. So I don't really make money in the bank. But if I keep the bulk of my savings over here, even if it has to sit around and do nothing, now we got a better inflation hedge. Now we got a better way to be able to make money on that money even while inflation's happening versus losing to inflation by keeping it in the bank. Does that make sense? So I'm actually trying to get better leverage out of it. I mean, think about it. Even if you have $100,000 that now makes at least 4% a year better than the bank, well, that just made you $4,000 more this year and it's tax-free. So a much better way to go about using it. Other ways you can use it too. I mentioned in other videos where I had a client who was gonna buy a commercial property. He was thinking about canceling his insurance policy. He said, Chris, I've got $300,000 in this policy. Maybe I should just cash it out, cancel the policy, and use that money to buy this office building that I'm gonna work out of. And I said, don't do that. Instead, let's go to your local bank or credit union, ask them if they'll give you a loan and maybe even some better terms if you use this as collateral for that building. And so when he went to the bank says, wow, you're giving us $300,000 collateral and you have a building anyways. They said, we'll give you $375,000 to purchase this building and build it out. So he did. He used that money, built it out, started renting out units so that his renters were paying the mortgage payment for him. He got this ridiculously low rate. It was 2% less than the people with the best credit will get because he uses life insurance as leverage to give him extra security. So because of that, he got this low term, low payment, low interest rate. And then a year and a half later, after it was all said and done, he went back to the bank and said, can you take that lien off my life insurance? And they said, yeah, looks like the building is done. It's got the value in it. You bet. And they kept the terms the same. So he got the best interest rate he'll ever get on a building, and he's able to still use the money from his life insurance for other things. What are some other things you could use it for? I love to use it for real estate investing. Cash flowing investments. Great way to use it is to be able to invest that money, have the cash flow pay back in, to keep cycling that money through. So you use the money to invest and then it goes back in. And then you use the money to invest and you keep cycling the money in and out. All the meanwhile, you're earning more in interest than what the insurance company charges you in interest. So you actually make money in two places at the same time when you do that. And this can be used for whatever you want. This can even be used for your business. Do you understand that not just this guy that did it for real estate, guys like Walt Disney use this to fund Disney World. The banks would not come in with money unless he put his own money in. He used his life insurance as collateral for the banks to come in with the rest, and the rest is history. He's able to now Disney's made billions upon billions of dollars with just using his life insurance as a seed money to start it. Pampered Chef also started using life insurance. Ray Kroc bought out the McDonald's brothers and kept the executives on board by using life insurance to keep paying the executives money so that they could keep the company growing and then McDonald's would actually be in business today. JCPenney's actually paid their payroll during the Great Depression. They were able to pay their payroll using that money. Heck, I mean, GE's even paid pensions using this. I mean, there's been people using this for decades, and it's nothing new. But the great thing is that the reason why it's complex for some people is because they think, wait, how can I use it for so many things? Government and even the IRS has taught me I have to get an investment vehicle and it only does this one thing. It's only a retirement vehicle, nothing else. Guys, you got so many options and so many ways you can use this that creates flexibility and really does create that lucrative path. So is it for you or not? It just depends on your situation. It's for a lot of people and not for some others. But I'll tell you this, when it's done right and it's designed the right way, it can be an amazing way to help accelerate and build your wealth faster right now. Guys, please like and subscribe on our channel here at Money Ripples, and check out this next one in the series of Make You Rich.